Okay, people, midweek market update. It's not been as good a week as it normally is. Let's just go look at that right now. And where are we on this? Well, those are price earnings ratios, valuation of companies, their share price compared to the profits they make. Red is bad. It means they're high, and the extent to which they're high can be seen in the numbers you can see on screen. Energy and banks remain relatively cheap. We'll come to those in just a second. Performance for the week, not too bad. Tesla shooting up. The founder of Tesla, Elon Musk, just had a meeting with the Indian Prime Minister that they want to set up in India. So that should actually give them a bit more of a boost. But I'm going to have a look at Tesla in just a second. The tech stocks have eased off a little bit. Medical devices shooting up. Another measure of valuation is price earnings growth ratios. But same story as ever. Everything's expensive if you look at that. How are we doing so far year to date? Well, the Nasdaq is up 38%. The S&P 14. Brent crude price of oil's come down. Obviously, your energy bills won't have done because energy companies like to profiteer and price gouge, so that's not going to get passed on anywhere down the supply chain. And the UK market's up about 8%. The S&P, as I said, up 14, doing significantly better. Where are we on that S&P 500? Well, it's had a little bit of a pullback. Not much, as you can see there. It's barely a dot. But you shouldn't be surprised if there's a little bit of a pullback, even though longer term it looks very attractive. The MACD is moving up very nicely indeed. This monthly one should go along there, and that should mean this continues in that direction, and that all-time high gets taken out. Similarly, the stochastic, which tends to be a bit more sensitive, the monthly stochastic that way, the weekly, which again is going to give you a bit of a idea that we could get a little bit of a sell-off, as we did when that happened, and you saw what happens. It could go as far as that before resuming up, and that's probably what's due to happen at some point. It's probably going to go to this support line that we've seen for a while there. Okay, so that gives you really good insights. This, not good. That, likely to fall. That, likely to fall. All right, probably not off a cliff as sharply as I've shown. Apple, looking attractive still. That's the base case I drew. January is when we get in, as you know, or got back in, as you know. That's the bear case round here, which isn't looking likely, and that's the bull case. The bank's certainly all very positive on it. Where are we on this? Well, that should continue going that way in the long term, but in the short term, you can see the weekly stochastic suggests there'll be some short-term profit taking, which already seems to be in place this week. I thought it was going to happen last week or the week before. Okay, now, just as a reminder what all of these show. That's what the average analyst price target is. That's the current price. That's the high analyst recommendation. That's the low analyst, somebody's smoking pot. And the return potential is the difference between the current price and what the average analyst thinks. So that. Okay, not that the analysts are particularly accurate, but I like to show it. Where are we on Alphabet? Similar kind of story as for all of the stocks that we have. Should be doing that. Do not panic whilst this comes down here and then resumes up. If you want to see how bad that can be, well, just have a look at that, and just look at what happened with the prices previously. But in those occasions, or on those occasions, the monthly MACD was falling. This time it's rising, and therefore any falls in the short term should be small, and then we should get that. Okay, and that's a similar story. So to all of them, this I've already explained to you, so I won't bore you with it. Microsoft. Here you go, look, small bit of a pullback. It's probably going to come back to this mid-tier line. Could fall as far as this, which would mean it's going to fall to about, what, $300? I don't think so, but it could do. Okay, but it could do. That's just one of those things that's in the past. You've seen what can happen even in a rising MACD. Look at that fall, but you get the rebound pretty quick. So bottom line of education here is if the monthly MACDs are rising and the weekly stochastic falls, the falls will be short and shallow. If, and it's not the case at the moment, the monthly MACD is falling and the weekly stochastic falls, then the falls will be big and sharp as they happened there. All right, simple lesson. You might want to pause this. There's your buys. There's what the average analysts think. That's what the most optimistic analysts think. The most optimistic one is right. Similar story for Amazon. That's what's going to happen, but you might get a bit of profit taking. I mean, wouldn't you? Of course you will. You'll get a bit doing this before it goes back up. But the issue is, will it do that or will it do this before it goes up? Well, either way, we'll keep a midweek update on it. And since we will, you better have a look at this lovely image you can see on screen now, alpeshpatel.com/links, because you will want to follow and subscribe so you don't miss the future stuff and you can make bucket loads of money, hopefully. Nothing guaranteed. That's the 11% on the average. What the analysts think, 220 is probably more likely on that one. Disney, well, there we go. It's got a bit of a base. It's come back to it. I thought it would, go up that way, but it's come back to the base. So let's see. This is still teasing us, and it might be until end of the year before it starts doing that. But it will probably at some point do it. See, these are all getting pushed down. That's still not managed to break out. So Disney are going to have to mention something to do with AI or China or something for it to break out of that, because it needs a bit of a shake-up that does that share price. The return potential 33% according to the analysts on average. Nvidia, really the issue with Nvidia is, are you risk averse? In which case you sell some, you might sell 10%, 15%, 20%. I don't know what the exact amount is that you will take. Okay, so that's the whole point with Nvidia, that you will be selling some because the upside is going to be limited in the short term. However, if you're risk loving, you'll say, screw all of that, Alpesh, I'm just risk loving, I'm going to keep hold of it. Some people, I think, given they've made over 100%, might sell, half of it even, but just be aware of pullbacks. And whilst the highest analyst thinks 710, a lot of people don't, so just be a bit careful about that. Reminder about that. Tesla, so as I've already said, broken out of that. This is the scenario we're looking at, and that's what we're looking at. And yeah, all upside. You might get some short-term pullback, but like I said, like with the others, it's just short-term. Yes, I know the analysts think it should be substantially lower, but I think the analysts are wrong on that. It was a special situation for my Great Investments Program students. So if you're in my Great Investments Program, you'll know it was a special situation. We got in and it's been doing well. Meta, yeah, again, the upside now is looking less and less because, look, it's already halfway there. That's where it can go up to. So some profit taking almost certainly amongst people where they've made, say, 100% return. They might say, well, I'll sell 10%, 20%, and so on. That's where we are with what the analysts think for you to look at. Chipotle, it's been going sideways for a bit after such a massive rally. And maybe we're taking a bit of a break, bit of a breather before it goes up. Certainly you're going to get some short-term downward pressure, which I wouldn't be worried about. But as I said, if you're risk averse, you might sell 10 to 90% of it just because you're risk averse. If I knew what the exact future held, I would tell you, but I don't. That's why you'll determine it based on your risk appetite. ServiceNow has been doing great for us this year, did great for us 2 years ago, was rubbish last year, which is why we weren't in it last year. But in this year, since January, it's been doing well and continued to do so. And I think I bought some more last week, didn't I? I think I said on the Friday update that I bought some more, and so the analysts all agree with me as well, which is always nice. And despite what the average analysts think, I think that's probably more likely. Don't forget to have a look at my campaign for $1 million if you haven't already, because it will change your life. And alpeshpatel.com/links to be on my Telegram channel, my YouTube channel, and all the rest of it, because I'm an only child. So it'd be really good if you were on it. Thanks very much.